Thank you, everybody, for joining. Welcome again. What we like to do is to bring special guests on. We've got Darren there talking about mortgages. We've got Elliot from RPA. We've got a new launch. We're going to be talking about all things property. And at the end, another bit of information about something that's coming up. So welcome, everybody. I hope you're all not watching the cricket. Let's start with you, Darren, because you've not been on for a while. And mortgages is all over the press. We know that interest rates and goodness knows what. Still, people are joining. Welcome. Darren, give us a little bit of an overview.
Thank you, Chris. Yeah, I haven't been on for a while. Been just so busy with all these fantastic developments that seem to be coming through all the time, and answering lots and lots of mortgage questions. But yeah, to answer the question regarding the rates, it's been really good. To be fair, the expat rates will obviously follow with all the news that the UK rates have been coming down. I think the lenders are sort of trying to level the playing field a little bit. Some of them maybe cut the rates a bit too sharp just after the new year to try and sort of get into the market. But they're realising some of the rates are maybe a little bit too sort of sharp on the reduction. So they're sort of just levelling the playing field a little bit now. So, but the expat rates are slowly changing. So a couple of lenders this week have reduced by sort of 3 base points, which is to sort of come down by 0.3%. So it is getting there. It is really busy, not just for purchasing on all these developments are popping up now, but actually on remortgaging. So people are realising that this year's going to be another bumper year for interest rate changes for current products. And I'm also finding lots of expats where they've moved maybe in the last couple of years abroad. They're coming to the end of their deal, realising they can't go to a high street lender in the UK. They have to now pick up dealing with this year really is remortgaging and just explaining to expats how their rate's going to change and just making sure it's all affordable for them.
So, Darren, let's just put some numbers on it. Let's just say you've got a client with good status. Let's just say he works for a Shell, works for a good multinational, is born and bred in South Africa, and over there, and wants a 65% mortgage. What do you reckon the rate? I'm not going to hold you to it, but what do you reckon we're looking at now?
So the rates, especially for the South African clients, will be potentially about between 6 and 7% at the moment, and that's where we are at the minute. I'm just doing a couple of South Africans at the moment, actually. So some of the lenders are slightly higher depending on the client situation, but you're talking between 6 and 7% interest rates.
Okay, I'm not going to go through around the world and say UAE, Cyprus, etc. Don't worry, but no. Okay, all right, Elliot. Got a new launch, and I you know what? I'm gonna declare my interest here because in the new year, just before Christmas, I was in the UK and I went around some of our sites, and I went to Birmingham and I saw the Jewellery Quarter. I drove around there. I saw exactly where this property is. It's the third one in the trilogy after Scholars and Tyndall. So it's a nice area. It's a vibrant area, isn't it? It's a completed area. A lot of Birmingham is under development, but it's a nice area, and obviously we've done well with the other two. So tell us all about Sloane Court.
Exactly. Yeah. Well, thank you for that kind intro. And so just to echo really what Darren said, just first of all on sort of where we've seen the market sort of, or the year start, should I say? I think sentiment with a lot of people has shifted, and that's got a lot to do with the fact that we've seen interest rates and become a bit more palatable, and they're being a bit more and the lenders themselves becoming a bit more competitive with each other has led to more activity and more conversations and more interest in sort of like say tying that in with the new launch like with in Birmingham with Sloane Court. It's working really quite well. So yes, at the start of the year, activity wise, we've spoken to lots of people, and there's definitely more interest across the board, I'd say, which is great. So Sloane Court is many of you will have heard of the Copperworks or Scholars Quarter or even Tyndall Court. So this is the sort of final phase of that whole scheme with Kings Crescent Homes developer. This is the final part, but it's actually a much smaller development in the sense that if you think about Scholars Quarter as 100 units, this final block that's being released is only 32 units. So it's a little bit of a boutique-y finish, if you like. It's obviously very similar in terms of like its aesthetics to the previous units. And obviously what people really love about this, and as you mentioned, Chris, going to the Jewellery Quarter in Birmingham, we're not talking about skyscrapers here. We're not talking about sort of maybe more of the generic type blocks of apartments and things that we can get, and we do have. This is a much more authentic looking development, and this final phase is also still very much in keeping with the sort of the trend throughout the scheme. So it's not a conversion. This is new build. However, it does look like it could be a sort of an old warehouse conversion, but it's not. Just going back to sort of its location in terms of, as you're just mentioning, in the Jewellery Quarter, this sandy area here is Scholars Quarter. These are the CGIs for Copperworks and that kind of thing. So, and Tyndallsey, you can see it's very much in the middle of it all. And then just a short walking distance to the city centre. What we really like about this, and our investors who even bought in Copperworks, is now that the units are completed, they've got tenants in situ. We know what rents are being achieved. We know how desirable the location is from a tenancy perspective, and obviously the cornerstone to all of these investments is the tenant, essentially. So, for instance, with Copperworks, 1-bedroom units were renting within 2 days of going onto the market, and 2-bedroom units were renting within 5 days. That's on average across the board. But so there's been a strong uptake. It's been very popular in the rental market, and the demand there, which is great.
Elliot, and I do encourage people to ask questions as we go along. So somebody's already asked a question: where does the tenant pool come from?
So tenant pool, what we're finding is the sort of young professional market in Birmingham. In Birmingham itself, as people may or may not be aware, the economy really within Birmingham has shifted a bit. It's gone very much towards sort of the financial business side of things within the UK. So you've got the likes of a few years ago now, HSBC moved their sort of a main office up to Birmingham. You've also got Deutsche Bank, Barclays, and then sort of the subsidiaries to the finance district, like the PwCs of this world, the Deloittes, and everything else like that. So you're finding a lot of sort of young, sort of 28 to 38-year-old professionals working in that sort of sector, in the finance sector. A classic example I had for a client who had a tenant move in a week or so ago. The tenant was 30-year-old single male, working at PwC, had just been relocated from the London office to the Birmingham office, and earning earning a 6-figure salary. So good quality tenant pool in a good job. So which is really quite. It's a positive, right? And we know it's happening because we're seeing it in the first phase. So it's good.
I guess the other thing, and bringing Darren back in here, the good thing is because of Scholars Quarter, because of Tyndall, and now this one, you've got a good track history of tenancies and valuations, and therefore stands up well for mortgages. Darren.
Yeah, the comparables. I think when you get a new build sort of in any city or anywhere in the UK, if it's the first one or there's nothing to sort of compare against, it's very difficult to try and get the valuation sometimes to stack up with these lenders, because most lenders are adverse, sort of risk adverse anyway. But the good thing with this one, like Elliot was saying, this is the third one. So there will be comparable evidence, because there'll be people that have completed and on land registry, so we can actually use those to actually stack the valuations up. So this one shouldn't and probably won't have any issues at all. So it's which is brilliant. It just makes everyone's life a lot easier. The pressure's off. The stress for everybody involved means it should just sail through. To be fair,
can I just put fingers crossed on that, Darren? Can I just put fingers crossed?
You can put everything crossed, Chris. It's fine.
And I think Elliot knows exactly why I said that. Okay, sorry to interrupt, Elliot.
Yeah. No, look. I think what when as we're all sitting here and everyone's sort of joining us today to talk about property, is that it is a complex investment and a complex process. And we've got mortgages on one hand, we've got the site being built on the other, and there are lots of spinning plates and all we're trying to do when we're putting these together, and we've got these putting the right projects in front of the right people with the right tenant pool that will help from a lending perspective, and it's making that process as smooth as possible, which can be quite a tricky process to navigate, and making sure that we can try and get as many options as possible with knowing that there is tenants in a similar property next door in the same development built by the same developer, is all things that are going to help the situation. Yeah, I agree. That's how I started off the same. Okay. So again, you can just see how it's all set up and the aesthetics of the site. And say this is a slightly older picture, but so this site here is Scholars Quarter, which is essentially up now. This is Old School House, which is part of the first phase. So as you can see here, so we've got the tenure with the leasehold side of things. You see the prices starting from 197,000. So that's the studios. There's a couple of studios, and then one bedroom starting from 250. Still getting sort of, because of the way rents are and that side of things, you're looking at sort of 5% rental yields on a typical AST, a short typical 12-month rental contract. So all very similar to what we previously launched, and giving people that comfort and satisfaction.
Yeah, I'm just going to pick you up on saying, because I had a meeting earlier on, so that went really well. So thanks, Ashish. Just go back up. You've got short-term lengths, so I call them Airbnb style because there's some phraseology that goes around there. And you've got 13% for short lets. I'm not going to be controversial or anything, but is there a short-term let? When I say short time, we're talking about a week, 2 weeks, 3, whatever it may be. Market in Birmingham, is that something that? It's a question.
It's a very good point. So, but 2 years ago, when I started looking into this short-term let option, I mean, obviously, you can get very attractive yields. You can charge that bit more, and it can be a very lucrative area of the market to be involved in. So a lot of new developments and developers don't allow short lets within their projects, whereas developer in this instance does. And so we did a lot of research, and we spoke to companies that provide short letting and that sort of things to ensure that we felt it was a viable option. The thing with Birmingham, which is probably not people aren't necessarily aware of, but because the city's changed shape so dramatically in the last 10, 15 years, it doesn't necessarily it doesn't have a huge number of hotels. So, when you've got things like the Symphony Hall, the NEC, National Exposition Centre, but you've also got many more sort of attractions for people to visit Birmingham and spend, say, weekend trips and things like that. You've also then got, as we mentioned earlier, sort of these larger international businesses corporations that are sort of being based there. People having work trips or whatever. So you're suddenly building a much bigger picture for people needing short let opportunities, and so therefore it's becoming very viable on the basis that there aren't many hotels in Birmingham, a real shortage of hotels, that the short let option is there and is available.
And you can go to the Bourneville factory. I'm going to bring Darren back across there. Darren, how does that affect mortgages, the short-term issue, if at all?
So you obviously, there are some lenders that will definitely, especially expat ones, will definitely deal with. They class it as holiday lets. So when they look at the rental, they'll look at low, medium, and high sort of rental figures to work an average of what the rental would be over the year. They don't look at it for 52 years because obviously with the short term, you're not going to, unless you've got something fantastic, and it's obviously going to be rented out every single week. They'll look at it over normally a 42-week period, but there's definitely lenders will look at it. There's no problem at all.
Okay.
So the 13% now that we've done on the short lets is based on an 80% occupancy rate.
Okay.
There you go.
So that ties in with the mortgage side of things.
Yep.
To ensure that there is lending, or it works in line with what the lenders are looking for.
Thank you.
And so just to add on that as well, Elliot, what you were saying about the businesses, what I'm finding is I'm dealing with a company at the moment where they need short-term lets. So because they're using they're getting more and more of their workforce coming in, but the people are literally coming in working during the week and then going back home at the weekend. So actually they're getting the best of both worlds because they're actually renting this unit out for a long period, but actually the person's only in there for in the week. So that's what you're also going to get with the short term is Monday to Thursday. Then you get the Friday to Sunday. So some of these short term lets are actually getting double amounts, which is brilliant.
Yeah, exactly.
It means somebody's got to go in there, clean it, change the sheets.
Yeah, but that's what you get with short term. With the short term lets, you do have to have that care package, the cleaning package, because that's what happens. So
yeah. Okay.
And that's all that's within the cash flows and everything else that we put together. That's all included. That's all part of the package.
Okay, I think
it's very well to see.
Fair background there. Shortfall of 28,000 homes.
Yeah. So this is just some most recent stats really that are coming out about Birmingham. And it's just reiterating really why this is a good place to invest. We just talked about short lets and that sort of things. But really, if we go down back to basics, supply and demand, we've got the shortfall of property continuing in the UK, and this is specifically for Birmingham. On that basis, we're seeing sort of a 20% house price rise, just under by 2027, and a similar sort of amount from a rental perspective. So, if we're looking now at the market, we obviously last year was a trickier year. Interest rate rises. We saw slightly trickier economic positions and that sort of things, and the housing market sort of basically flatlined. Depending on what you read, went up a couple of percent, went down a couple of percent. Now we're coming into interest rates have now started to drop, and we're expecting them to continue to drop over the next year or so. All that's doing is increasing market activity, which we know will just then start pushing prices up again. And when we're taking into consideration supply and demand rises, there's not enough supply, prices go up. And that's just a very good example here in Birmingham of what's going on and what will happen. Coupled with, as I've been mentioning already about the economy and how it's changed within Birmingham itself. The most and to say, showing how the landscape's changed dramatically. 20 years ago, you probably didn't have a Michelin star restaurant in Birmingham. Now you've got the most inner city outside of London in the UK. You've obviously also got, which we've probably all heard a lot of, HS2, which is going to be finishing in the next year or two, I believe, which was connecting Birmingham to London within that sort of 45 minutes.
It won't finish. It won't finish in a year or two, Elliot.
Yeah, 2027.
All the way up to Birmingham.
Birmingham.
No, it's not. Well, I drove around there, as I said, at Christmas time, and I could see where they were digging the footings for the railway. Anyway, never mind. Sorry. What you got there?
I was just trying to find exactly when it said it's finishing. Anyway,
they have to work bloody hard and fast.
They do, yeah.
I shouldn't.
Okay, it's scheduled to complete by 2027, year or two. Seen the businesses. I mean, most notably, think about Goldman Sachs now putting themselves in Birmingham as well. They got an office to 600 people. Just changing the dynamic, changing the talent pool, changing the money in the city, et cetera, which is all making it more and more viable. And why now is also a good time to buy here, because you'll be part of that growth, and you'll roll with the growth and move forward with it.
There we are.
2029. I apologise. Not
Yeah,
2027.
see, I'm not here for nothing. God, you can't get one past me.
Yeah, exactly.
The other thing
Okay,
you haven't
so that's
mentioned
basically essentially what it's all about. We talked about the neighbourhood, which is great. So look, I think what I'm trying to get across here is if you want a very solid, reliable investment that has been tried and tested with the first and second phases, that you can physically go and see and feel and smell and all the rest of it with the earlier phases, which of course you're more than welcome to go and look at the site and everything else like that, then this is a really nice option. And from whether it be Darren looking at the mortgages of it, because he can look back at everything they do with Copperworks and Sloane Quarter, through to physically going to the showroom and seeing it's all here. If you'd like Birmingham, you like this sort of price point, this is a really nice option.
Darren, the question's just come in. I'm sorry, and Elliot. Somebody's come and said, why buy off plan? Why buy new when you can pick up something on Rightmove for maybe 10% less than the price? And the first thing that came to my mind to try and answer that question was the 10-year warranty. That's quite a nice thing to have, a 10-year building warranty that you can just not have to worry about the structure for the first 10 years. And of course, another thing you get are all the appliances are brand new, with all the guarantees that go with those as well. Yeah. And the other thing I thought was when it comes to the end and clients get asked the question, or the purchaser asks the question, you can choose if you want a wooden floor, you can change the colour of the tiling, work surfaces, that sort of thing. So you actually have some influence on how the place is going to look. What would you say to that?
Those are all valid points as well, but I think one of the biggest things, especially in the current climate, and excuse the pun on this, but with the current climate, but the EPC, the energy performance of the properties. With the cost of living, with the way that everything is more expensive in the UK, a more energy efficient property is a much better way to go. Because ultimately your tenant will prefer to, rather than buy the property that they can find in John's Road in the Jewellery Quarter, which is a 2 up 2 down terrace that's maybe the roof and the boiler aren't so great and the windows need probably looking at some point and things like that. It'll cost them a lot more to live there than it would in a property with a 10-year warranty that's got all the other points that you just pointed out. It's just a much more efficient way of living.
Yeah, Kieran, a regular viewer, and her cat have just said minimum. She loves the property. Minimum maintenance and upkeeping so important for a landlord. You don't want phone calls in the middle of the night saying the boiler's gone. So
exactly. The way I look at it is, if you're going to buy off plan, and you're not in the UK, so you're an international buyer or an expat buyer, you want as least touch points as you could possibly get. So you don't want to, if you go off and buy a brand new car, you're more likely to take what the dealership said and you do all your research and everything else, so you can actually do it at that particular point. With a second-hand property, you need to be able to go to the property, get a proper valuation done, because after 10 years, things are going to start, like an old Victorian property, not saying, but an old Victorian property, you're going to have the roof looked at, and with a brand spanking new property, like you said, Chris, everything's brand new. You haven't got to worry about it. If anything goes wrong, the build, obviously you got the warranty. So
yeah, and I again go back to it, mortgages as well. Right, okay. Chatted to Elliot earlier on and said, what else you got coming up? Can you give us a preview? Any questions, by the way, don't hesitate, write them down. But what have you got there, Elliot? Something coming new?
Going back to sort of how we have looked at the market this year and what we'd like to provide is we really want to focus on the sort of 3 key locations within the UK: London, Birmingham, Manchester. Yeah. And we will have another London site coming on relatively soon. What we still have there is Hendon Waterside, obviously in Hendon, which is a fantastic project with Barratt Homes. But we do have a new launch in Manchester that is completing in a year's time. So this is slightly less off plan than other options maybe in the market at the moment. It's significantly under construction and will complete in Q1 next year. It's called One Victoria in Manchester, very much a central city location, next to Manchester Arena, next to Victoria Station in Manchester. And when I say next to, I mean that is the station there. This is the arena here. This is the project. So we're right in the middle of the city, very much walking distance to the main areas. There are, which I'm sure many people on this are aware of, a very lovely scheme that's sort of out there, which is quite close by. This is that bit closer to the city centre. It doesn't necessarily have huge all the amenities that you might find with other schemes. So it doesn't have the gyms and the co-working spaces. No, it does have co-working spaces, but it doesn't have like the gyms and the bars and stuff like that. However, it does have the concierge. It does have the rooftop terraces. But also, when we're looking at these as an investment, the service charge is less. So depending on what people are looking for, you have a sort of slightly less service charge, which means your net return will be better because your rent's going to, just depending on what rent's being achieved. So I just wanted people to be aware. It's a very interesting, really well located central Manchester scheme. As I say, right next to Manchester Victoria Station. Other things that we talk about are up here. So this is right in the mix, as it were, and something that is well priced as well compared to other projects out there. So
are the prices going to pop up?
No, you're looking at prices from this one here. One beds, the majority of one beds are sub 300,000.
Okay.
Two beds from about 350.
Oh yeah, I mean, do you know what? Somebody said this to me once, so it's not my idea, is London, Manchester and Birmingham are like brands in their own right. And although at Holborn, we've got York, we've got Edinburgh, we've got Manchester and Birmingham, we've also got Burton-upon-Trent, we've got London, got a lot in London, we've got Brighton with you. We've got other, but I just think Manchester, Birmingham, London, you know, everybody's heard of them, we've got football teams, and they're the most popular. So, yeah, well, thanks for that look at Victoria 1. I'm sure, by the way, it's on our website. If anybody wants more details, they contact us. No problem at all. Darren, so busy time. Mortgage rates, we hope, are going to come down. What else is happening in the mortgage market that you can tell us about, just to give us a little bit more information?
You got me coughing now.
I'm sorry.
You're passing it on. You're passing on. To be fair, it's just been the lenders seem to have come back. I've just had a message pop up. So we've got a lender that majority of their lending was literally just for the Middle East, but now they're actually dealing with not just the Middle East, but they're now looking at sort of the Hong Kongs and Singapores and those. So that's can only be exciting, because if those lenders have started opening where they're going to be funding, the other ones will actually follow. So, yeah, if you've got any mortgage questions, I'm happy to answer anything you've got.
Somebody just asked a question for you, Darren, although it looks like you're frozen.
It's getting back to where it used to be.
Sorry. No, it's okay. Big question. And this is one, obviously, you know, I used to do mortgages. The lending comes from the country that the property's in. So, you know, because we do not want any currency exchanges on a monthly or a quarterly, no matter, depending on how you pay, going on. Yeah. So, in answer to somebody's question, yeah, we've got, would you say 30 different banks that you deal with on a daily basis, Darren?
Well, we don't have a panel of lenders. We can deal with everybody, but I would say, yeah, 30, 35. So, yeah.
Any just questions have come in from Mr. Anonymous. Any more info on the Birmingham property this is supposed to be about? Okay, all right. Sorry, I don't know how to answer that. We've got all the information you need, Mr. Anonymous. So please, if you're a client, get hold of your wealth manager that invited you. If you're not, then please contact us. No problem at all. I'll give you my email address. It's chris.allen@holbornassets.com. So if you have just come on through many avenues to get onto the show, and it is a show, then I'll answer that and give you more information. I need to speak, Elliot, because I need some water.
Yeah. Sorry. I mean, obviously, we went through the process. So in terms of the Birmingham option, as I mentioned earlier, so you're looking at 1 bedrooms are starting at £250,000 in Birmingham, and you're looking at about 550 square foot properties. There are some studios that are just starting around 200. They're about 400 square feet, and 2 bedrooms are about 350 and about 750 square feet, 750 to 850 square feet. So if you'd like any more anything on availability or particular units or cash flows or anything like that, please reach out to Chris, and then we can arrange a meeting and probably go through things in more detail. Main point about this is to make you aware of the projects, to give you a high level idea of the project and headline figures, and then we can discuss more in detail in the one-on-one meeting.
Yeah, absolutely right. I mean, we've got floor plans, we've got everything you need. If somebody wants a corner unit or they want one looking south because they want the sun in the morning, we can help you go through all of that and obviously tie you up with Darren and talk about mortgages. So yeah, let me just have a look. I think I saw one more question come in from Ellie. Hi, Ellie. All the mortgage lenders have the same markup rates. Oh, one for you, Darren.
So they don't know. So every single lender will have their own interest rates. So every lender will be determined by, or every client will be determined by their nationality, place of residence, income, rental figure. So what we do is we'll look at all that information before we present which lender is the best for that client. But to answer that quite specific question, no, every lender has different rates. They don't all offer the same interest rate. They will all be completely different.
And that's why I urge everybody, every time I have a meeting, speak to Darren, speak to your own mortgage broker, whoever it may be, hopefully Darren, and just say, look, I'm in South Africa, I'm self-employed, and Darren can number crunch, get it across to lenders, get a principal, an offering principle out to you, just so you're reassured. I say that as a health warning every time. So I think that's it. You've got a little round thing in your eye there, Darren. I think it's a light.
It is a light, unfortunately. I'm in my office, and that's the only light I've got in this place. Is a little.
Anyway, thank you. Looks like you might be becoming the saint. Okay, thank you, Elliot. Great to have you on.
Thank you.
Thank you, Darren.
Thank you very much, Jeremy. Any questions?
Oh, this is recorded and will be on our website. So if you need anything, let us know. Thanks everybody for joining. Brilliant. Have a good day, and let's hope we can win the cricket. See you later.
Yeah. Thanks a lot. Cheers. Bye bye.